We'll start right away. So it's already 6:05. And in this class, all we're going to look at is what is 5-day moving average, which is something which we use on a regular basis to take swing trades. And what is ATR, average true range, and how to use them properly. And one is going to determine the momentum of the stock in the shorter time frames, and the other is going to determine how to set your stops properly and how to manage your positions properly. And also, it's going to tell you when are you too late to enter a position on a particular day and when are you not. So first things first, what are we going to start with? We'll start with ATR, all right? So we'll start with how to set it up on your screen, number one, and number two, how to use them, and number three, how you can take advantage of them and join it with your already pre-existing system, or if you're going to follow along with exactly how I trade, it's going to be how I use it instead as well. So first things first, if you're using TradingView or any other charting software, it doesn't really matter. Go to your indicators and search for average true range. And this is the indicator which tells you the value of ATR is. What the ATR stands for is average true range. All right. So when you add it, you'll see something like this pop up on your screen. This is what we call as ATR. Remember, when you're looking at the ATR, we are always only going to look at the daily time frame, by the way, only daily time frames. If you're going to look at ATR value, stick to the daily time frame. What you need to be focusing on is you will see a number right here on your left hand side corner of your screen. There will be a number display. So put your cursor on the current daily candle and look at that number. The number for the ticker symbol DLR, which is the current swing trade which we are in, and we sold some today, and the ATR on that is $4.30. And now let's look at some other stock. Look at Tesla. Stay on the daily time frame, by the way. Stay on the daily and look at Tesla. The ATR is $17.66. I'm talking about the number right here. This is the number which you need to be focusing on, which is 1766. And if you see it right here, that's where the line is currently sitting at. So 17.66. And let's say we go for what are the stock we currently hold. BYD, DLR, and let's take UPSD, which is something which we averaged up on today. UPSD, it has an ATR of $5.54, 5.54. I'm talking about the number right here, 5.54. And let's take a look at QQQ, which we trade on a daily basis. The ATR is $6.90. Let's go over SPY. The ATR of SPY should be somewhere around $5 and change. Yeah, $5.94. So what does it mean? Every stock has different ATRs if you noticed. So ATR is nothing but an average expected move of a stock for a particular day. I'll tell you what it means. Let's say there's a stock which is trading at $10, all right? There's a stock trading at $10 and it has an ATR of 50 cents. The number here on this hypothetical stock is 50 cents. What it's technically telling you is as soon as the market opens, the stock can either go up 50 cents or down 50 cents for that particular day. That is the expected move for the stock on a particular day. Take the current example, SPY. The ATR is 5.94. All right. So now the opening price for SPY, you can find the opening print right here, by the way. The first thing you need to look for, where did the stock price open? The stock price opened today at $584.71. The next step, check the ATR. What's the ATR? The ATR is 5.94. So now all you're going to do is add that $5.94 to that opening price. So let's do it. 584.71 plus, let's call it $6 for ATR, gives us around $591. What is the highs of SPY today? High of SPY right now for today is 591.04. So which means they opened at 584.50ish and change, moved one ATR towards 591 by the close, and pulled back and closed the day at around 590.30. All the ATR tells you is what's the expected move for a particular day is. For SPY, they opened today at 584.71. The ATR is 5.94. Let's just call it $6. So now in order to determine the expected move for the day, it's 584.70 plus $6 to the upside and minus $6 to the downside. which means they can either go up towards 591, or if they have a down day for a trend day to the downside, it can go down towards 584 minus 5, which is somewhere around $579 to the downside. All that ATR gives you is the expected move. So let's talk about the other stock with the same example. Take QQQ, for instance. QQQ has an ATR of 6.90. What is the opening price of QQQ today? 497.50. So add this ATR to the opening price. What do you get? What's the expected range? 497.50 plus $6.90 gives us around 503.50-ish and change. What is the highest of QQQ today? 503.95. So what happened was they opened the markets at 497.50. They moved one ATR. They rallied all the way towards that one ATR value, which is $6.90 to the upside, and then stopped it right there. So ATR is giving you the expected move, the moves to expect on that particular stock for that particular day. Doesn't mean every day the stock has to move to this one ATR level, by the way. But if it does, if we do have a trend day like today, this ATR is going to tell you an area for you to take profits from. This ATR is going to tell you an area to, like, okay, the stock has already moved one ATR. Let's say you entered the market late today. You only entered at 3 o'clock or something in the afternoon, 1 hour before close. And you see QQQ is already trading at 502, and you check the ATR, and the stock has already moved almost one ATR, and there's no reason for you to enter a new long position over there because one ATR move is already done. So let's go over another example. Take DLR, for instance. This is something which we have an active position on. So the opening price, 183.39. What is the ATR? ATR is $4.30. So what's the expected move? So 183.39 to the upside plus 4.30, 183.39 plus 4.30, which gives us around 187 to the upside. And if they had a down day, 183 minus 4.30, which will be around $179 to the downside. So 179 to the downside and 187 to the upside will be the expected move for the stock based off on the ATR. So now this is also going to tell you an areas to set your stop losses on. Sometimes you'll be in a position where, like, you'll enter a stock, set a random stop loss, get kicked out, and see the price instantly. As soon as kicking you out, you'll see it push towards your favor. And even if you if you set a stop losses at one ATR, it's still going to happen, but the chances of that happening on a repeated basis goes down significantly. So let's say you enter a trade, and this is what we do on a regular basis, by the way. This is only for our server. So if you've been in the server for long enough, and if you've been following the small account staff for long enough, you'll know that our stop losses are typically wider. I wouldn't say wider, but you might feel it's wider, but in reality, all of those stops were the higher lows towards one ATR. All our stop losses are always one ATR risk, by the way, one ATR from the opening price. So go to a small accounts tab and you can see the stop losses for every single thing. Let me change my screen so that I can show you guys. So right here, if you see, first thing when we opened, where is DLR? Yeah, when you open DLR, from closed, where did we open? This is averaging up. Yeah, for example, right here, when we opened DLR, our average entry was somewhere around $179, by the way. Where's our stop losses? 175. Why 175? Because that's the recent higher lows which the stock was logging. And that also coinciding with one ATR move to the downside. So now, for example, the recent one, UPST, let's talk about it. Go to the UPST. First thing you need to look at is what's the ATR. The ATR on UPST is $5.54. Our average entry on this one is around $69.50 to $70 zones. That's where most of us entered on this name. And our stop losses was at $64. Why $64? What's the ATR? Yesterday's opening price was $68. The ATR is 563. 68 minus 563 which is putting us at around $63 and $62 ish and change. Now, if you go to the daily charts and see, look for any higher lows, look for any areas of interest near that area. What's the area of interest which we have near that area? This level right here, $64.30 ish. That's the closest lows which we have. And if the price breaks it, which we know that we will know that we are wrong, and we can just cut it for a small loss. And it is also within the vicinity of one ATR value. And hence the stop loss is at $64 and change. And now let's go over another example. And when we entered NOW, let me switch over the screens just so that you can see the charts as well. So NOW, when we entered this, we entered right here at around $950 and change. That was our entry price on NOW. And our stop price was around right here at 930s. So the ATR on NOW is around $24 and change. That's the ATR. Just give me a minute. All right, sorry about that. Okay, so now when we entered NOW, we entered somewhere around $950, and the ATR on NOW at that time was 2150. So your entry is 950. What's the expected move? $21 from 950 to the upside and $21 from 950 to the downside, which puts us around 929 to the downside and 971 to the upside and change. So what was our stop loss when we entered it? Our stop losses was around $930, which is around the same vicinity of one ATR from the opening price. This is how simple it becomes when it comes to setting stop losses, by the way. And once you set your stop losses at 930, then you need to be looking at position sizing. Okay, my stop losses at 930. How much can I risk that even if I get stopped out, I won't lose more than 1% or 1.5% of my account? That's where the position sizing happens. So a lot of people do the opposite. They will see, okay, this is how much money I'm willing to lose. If I take this options and set my stop losses over here, then I will only lose this much. So they'll set their stop losses based off of how much they are willing to lose. And hence they get stopped out over and over because they just set it at a random area. Some people go with, I'm setting the stop losses at 15% of my options. So why 15%? It has nothing to do with the current price. So hence you set a stop loss as 15% of your options as a random area, you get kicked out, only to see it work in your favor because you set your stop losses at no particular high or low or no particular low or high for shots. It was just a random area. It's based off of how much money you are willing to lose and not based off of the levels which the charts told you that it's important. ATR is going to help you with that. So ATR is nothing but the average expected move. So if you want to give it a try, go ahead, give it a try. So go for Tesla. Go to Tesla's daily chart, only on the daily time frame, by the way. First step will be going to the indicators and enabling the ATR, adding the ATR to the indicator section. And open Tesla on the daily time frame. Let's assume Tesla opens at 350 tomorrow. And first thing, what you need to do, check the ATR. Let's say ATR is $18. So this Tesla tomorrow opens at $350 and it has an ATR of 18. What's the expected move? How do you calculate the expected move? 350 is the opening price. ATR is $18. What is the expected move? Pretty simple. $350 plus $18 is going to give you the upper bound move. And 350 minus 18 is going to give you the lower bound move, right? So let's do it. 368 to the upside, 332 to the downside. That is going to be your expected move for Tesla for tomorrow if they open at 350. So let's go ahead and talk about QQQ, similar. Let's do a similar example. Let's say QQQ opens at 503.50 tomorrow and the ATR is $7. What's the expected move to expect from Qs tomorrow? So 503.50 plus 7 puts us at 510.50 to the upside. 503.50 minus 7 puts us at around 495 to the downside. That is the expected move from QQQ as well. 368. Yeah, there you go. Bigger. And when it comes to QQQ, it's 503 plus or minus $7. That is the expected move to the upside and to the downside. So hope this makes sense. Hope ATR makes sense, by the way. And I'm gonna let you guys give you guys a chance to unmute yourself. So let me know if you have any questions. You can unmute yourself and ask it right away. Are we good? All right, nothing. All right, so if you have any questions which might pop up later, and one common question, I'm just gonna answer it right now. So, which is, I don't use ATR on the shorter time frames. Number one, I don't use the 15-minute time frame. I don't care about the ATR on the 15-minute time frame or 30-minute time frame. It doesn't really matter to me. The only thing which I use the ATR for when I'm swing trading in particular is to get the expected move for a stock. Every stock has its ATR on its own, and every stock has its own expected move. So when setting stop losses, you can't go with same 15% option stop loss for every single stock which you trade. Some stock requires a wider stops because the ATR will be a bit wider. Take UPST, for instance. UPST is a $70 stock, right? It has an ATR of almost $5.50, which means on a percentage basis, that's almost an 8% move every single day, by the way. $5 ATR on a $70 stock is a bit volatile. So, which is telling you the stock is going to be a bit volatile. The ATR immediately told you it's a $70 stock, but it moves $5 every single day, which means you can expect at least an 8% move up and down on an intraday basis easily. Shouldn't surprise it. Take yesterday, for instance, right? Yesterday, UPST opened at 68.50, rallied all the way up towards $74, which is one ATR moved from an entry price, by the way. 68 plus 560 puts us right here at around 74.50 and change. And then closed the day flat. Shouldn't surprise anyone because they moved one ATR and they retraced back to close the day flat. So something to pay attention to. And the most volatile name which we traded is NNE, the ticker symbol NNE. And this is a $25 stock. When we traded this, the ATR on this one was somewhere around, where did we take this trade? Right here. Yep. The ATR on this name was around somewhere on the ballpark of 4 points. For a $17 stock, 4 ATR we're talking somewhere around like 20% move every single day, by the way. So if you want to know whether a stock is volatile or not, take the stock price and compare it with ATR. And NOW having a 21-point ATR might sound like a big deal, but it's a $950 stock. $20 move on a $950 stock on a percentage basis is nothing. But a $3 move on a $25 stock is fucking crazy because we're talking about a 10% move on a day-to-day basis, which is a bit more volatile. So if you want to determine whether the stock which you're trading is more volatile or not, check the ATR, compare it to the current stock price. That's going to give you the average expected percentage move. So when you're trading stocks like NNE, which has an average movement of 20 to 30% on a daily basis, immediate first reaction should be, okay, I'm going to size down. Wider stops, but position sizing will be lower so that even if I'm wrong, which you will be most of the time, I won't be losing a lot. But if I'm right, since my stops are wide, my profit taking target will be wider as well. But since the stock moves almost like $3 a day with the current ATR, the odds of the stock hitting the profit taking target is also higher. This is how you go about ATR and setting your stop loss, by the way. First things first, start with daily, look at the ATR, get the expected move, and see if the area which you're planning on setting your stop losses at is within the bounds of one ATR. For example, let's say you're planning on entering NNE at $19. ATR is around $3. And within that $16 zones, see if there is any higher lows there. That's what I mean by within the bounds of one ATR. So if there is any lows near this area, that's few cents under it is where you're going to set your stop loss. And once you set your stop loss right over there, Then you're going to go and calculate the position sizing. If I enter right here, if I set my stop losses right here, how much shares should I be buying that even if I'm wrong, I shouldn't be losing more than 0.4% or 0.5% or 1%. That'll give you the position sizing. So now you just open the trade and you just walk away. And if you get stopped out, you get stopped out. You won't be losing more than 0.5 to 0.6% of your account. If you're right, you're going to come back and sell it or set some limit, sell and go, and it'll automatically sell it for you. Zero stress. Your eyes won't be glued to the screen all the time. And that's how you trade. Boring, right? That's how it should be. So hope the ATR is clear. And now let's go over 5-day moving average. And then we'll talk about how to use these two in conjunction. So ATR mostly revolves around position management side, if you notice, like how to manage the positions properly, how to set your stop loss. But the 5-day moving average gets into the entry strategy areas, right? It has nothing to do with position management, but it has everything to do with getting a better entry, especially for swing trades. I don't use this for day trades because opportunity. I only day trade QQQ. So the amount of times this happened where the QQQ drops towards 5-day moving average and find buyers happens still, but you wouldn't see it quite often. You wouldn't see it as a quite often spectacle, is my point. Since we trade individual names, you'll see this happen over and over again. So let's talk about UPST today. And then first things first, in order to set the 5-day moving average up, it's not going to indicator and looking for SMA and setting it at 5. I'll walk you through it. Go to the indicators on TradingView and search for LEVEL, level UP, up. All right. So you'll see this one right here, level up 5-day moving average by John Muckshaw. That is what you need, right? So if you're going to go for the 5-day moving average, what you need to look for is go to the indicators and search for a level up on TradingView. And you'll see a script from John Muckshaw UStat. So I don't want to dump a lot of mathematics in this session on you guys, like talking about how this is calculated and all that. We don't need it. If you're not interested, you're not interested. Doesn't matter. Just use this. It's going to automatically do the calculations in the back end and update the 5-day moving average for you. All right. So level up, that's the name of the indicator. That's going to give you the 5-day moving average. Makes your life easier. Go for it. All right. So once that is added, let's see how it looks like. All right. Let me remove off all these AB maps, which we don't need. So let's just have this indicator right here for us. Remove this, remove that. All right. So the blue line which you see on the screen is what we call as 5-day moving average, by the way. All right. What it does is calculate the momentum of the stock for the last 5 trading days. It's as simple as that. Calculate the momentum for the last 5 trading days. That's all it does. So how can we use it? When a stock is in an uptrend, you'll see the 5-day moving average sloping to the upside. For instance, right here, you'll see a flat 5-day moving average, and you'll see the 5-day moving average start sloping to the upside, which is telling you for the last 5 days worth of momentum is positive. Simple. So now when the momentum is dwindling, when the momentum is fading out, the 5-day moving average will look something like this, sloping to the downside. So this is the opposite side. So when the 5-day moving average is sloping to the downside, it's telling you the last 5, even if the daily is in an uptrend, doesn't really matter. The last 5 days worth of momentum is favoring the sellers. So if you want to open something new, you've got to wait for the buyers to take back control before entering anything. So now, how will you know that the buyers are taking back control? So now that is where you're going to wait for the 5-day moving average to either flatten out or start sloping to the upside. When that happens, it's going to tell you, okay, the buyers are taking back control, and I can enter a trade once the stock price recaptures the intraday VWAP. And then once I enter right there, what you do, you go to the daily time frame and look for the ATR and see if there are any higher lows near your entry price for a proper stop loss. And you're going to enter right there once the 5-day moving average starts sloping to the upside, and set your stop loss and calculate your position sizing, walk away. As simple as it gets. So the 5-day moving average tells you the momentum for the last 5 trading days. And what we look for is a positive flat to rising 5-day moving average is what we look for. What I mean by that is the 5-day moving average should be flatten out or it should start sloping to the upside. And for example, let's take QQQ for instance. What do you see here? The blue line is, let me remove the drawings. The blue line is the 5-day moving average on QQQ. What do you see? This is what we call as declining 5-day moving average, by the way. All right. So what was going on? There you go. So you see the momentum was positive all along. And once the QQQ dropped on Wednesday under the 5-day moving average, the momentum for the last 5 trading days is still to the downside. So into tomorrow, we're still not long on QQQ for swing trades, by the way. If you want a long QQQ, you want to wait for QQQ to get back above this 5-day moving average and not just get back above. You need the 5-day moving average to start sloping to the upside. Two things. The stock needs to be trading above the 5-day and the 5-day should be sloping to the upside, which is telling you that the buyers are taking back control and the momentum is shifting in the favor of the bulls. So whenever you see a positively sloping 5-day moving average, which means the bulls are in control, try not to short the markets. You're going against the trend, you're going against the momentum, might play out once in a while and you might make money, but again, the odds of you doing it over and over and over again goes down significantly. So if you're a trend trader, this is going to help you big time when it comes to, this is all we use, by the way. Two conditions: the daily should be in an uptrend, and on the 15 minutes or 30 minutes, the stock should be trading about the 5-day moving average. Simple. And another thing, if you notice, if I switch to 30 minutes, the 5-day moving average, this blue line stays at the exact same area. If I go to the 15 minutes, it stays at the exact same area. If I go to the 65 minutes, exact same area. It doesn't change time frame to time frame, by the way. So if you ask me what time frame, all of them, because the moving average stays exactly the same. This one in particular, because the calculations behind on how the 5-day moving average is calculated is completely different from how a normal, like if you use 20 EMA or 2 EMA or 20 SMA, it doesn't really matter. The calculations are different than that. And the calculations are different when it comes to calculating the 5-day moving average. So it stays the same regardless of which time frame you move it to. All right. So two conditions: flat to rising 5-day moving average should be there, and the daily should be about 20, 50, and 200-day moving average. All right. So let go ahead and add this indicator to your chart. Go to indicator and look for a level up. So go to indicators and look for level up and add the indicators to your chart. And once you add it, I want you to go to SPY, SPY, and tell me if SPY is in an, for the last 5 days, whether SPY is in an uptrend or in a downtrend. Check it out. Let me know. So what
Mario,
we're, yeah, go
I
ahead.
I have a question.
Go ahead.
This only works for common stocks, right? It don't work for futures, right?
It
So like
automatically
SPY?
if you go to the settings of this, it automatically calculates for futures as well.
Really?
Right here, auto adjust minutes for crypto and futures.
Ah,
Enable that. It automatically calculates for futures too.
thank you, sir. Now I could just use one. Thank you.
Yep. All right. So did you guys figure it out?
Eric,
Go ahead.
I missed something. You said the daily should be above what?
Our daily should be about 20-day moving average, 20 SMA, 50 SMA, and 200 SMA.
Okay, thanks.
20, 50, and 200. The daily time frame should be about, the stock should be trading about all these three moving averages. And then
Oh,
when the stock is an established uptrend, then you go to the shorter time frames to see, okay, the daily is already in an uptrend. It's looking strong. How's the shorter time frame looking? So that's where the 5-day moving average comes in. You're like, okay, like last 5 days of momentum, the stock is trading about the 5-day moving average for the last 5 days, and the 5-day moving average is sloping to the upside. The daily is in an uptrend. Shorter time frames are also in an uptrend. The next question should be, if I enter the stock right here, do I have a proper area to set my stop losses on? This is where the ATR steps in, which we spoke about
oh,
before.
okay. Thanks a lot.
All right. Yep. So now go to SPY's chart and try to figure out if SPY is, what's the last 5 days with the momentum on SPY. I'll
Hi,
give you.
Mario.
Oh, go
I
ahead.
have a question.
Mhm.
I have a question. Can you hear me
Go ahead.
well?
Go ahead. Yes, I
Okay.
can.
Yeah, and this is related to ATR. If you
Mhm.
go to the daily chart on any stock,
Mhm.
you see that the daily candles are different sizes. How do you
Yep.
know which one is the best one to pick? Do you
No,
go
no,
one
no.
day prior or?
Okay, ATR calculates the average true range for the last 14 candles, by the way. Do you see in the ATR it says 14
Okay.
RMA? So it
Ah,
gives the true range of the last 14 candles. So it's gonna take the true range, absolute highs and absolute lows. Again, I said I won't get mathematical, but again, for the last 14 trading days, the absolute highs and absolute lows of each candle is taken, and then the ATR is calculated from that.
oh,
So
beautiful.
yeah. So all you are seeing is, yeah, every candle is different. But again, it's taking the absolute values for the last 14 trading days. What happened in the last 14 trading days? And that's what you're getting. That's the value which you're getting for the last 14 trading days is the ATR. So now,
Okay, thank you.
yeah,
Yeah, that
let,
answers my
mhm.
question.
Yep. Tomorrow, if the SPY opens at 591 and you see the ATR as 6, so it's going to tell you, okay, 591 plus $6, 597 is the expected move to the upside, and 585 is the expected move to the downside. That's it. As simple as it gets.
Thank you. Appreciate it.
Yep. All right. So now that the ATR is done, go to the 15-minute time frame and see how the 5-day moving average is looking. The daily charts are still on an uptrend. There is no denying that because we were trading at new all-time highs, and it's just a small pullback after logging in new highs until proven otherwise, correct? So let's go to the 15-minute time frame, and you can see the 5-day moving average sloping to the downside. And the stock price is trading under the 5-day moving average, which is telling you, all right, even though the daily is in an uptrend, exercise caution on shorter time frames. There is no reason to rush into SPY to trying to time the bottom and buying long right here. Wait for the stock price to get back above the 5-day moving average and wait for the 5-day moving average to start sloping to the upside. Then you can, let's say if it happens at 592, doesn't really matter. The goal is not to buy the bottom or buy the lows. The goal is to make money, correct? So once the stock price goes to 592, look at the charts. Okay, the 5-day moving average is starting to slope to the upside, let's assume. By the time it hits 592, and the 5-day moving average is sloping to the upside, the buyers are taking back control. What's the ATR on SPY? ATR on SPY is $6. So the one ATR from 592 puts us at around 586. Look for if there is any recent lows at 586 and change. There is none. So what you do is you're going to wait for price to pull back towards the 5-day moving average, towards that 590-ish and change. And then one ATR is going to give you the stop loss right here around this lows at 584. And then you're going to take it. You're going to enter at the 5-day moving average tag, and then you're going to take it all the way back up. I'll show you some real-time example on what we did today on Upstart UPST. I don't know how many of you here follow the small accounts, and this is an example of what we took today. So yesterday was our initial positions, by the way. So we were testing the waters right here. Once the stock price got above the 5-day moving average, our entry was somewhere around $70.50 to $69.50. Around that zone is where our entry was. Stock price got above the 5-day. We got involved right there, and we set our stop losses right here at 64.50, which is almost 1 ATR from our entry price, and that is the starter positions. And we averaged into it today. What happened today? Why did we average up today? What's the 5-day moving average did? You can see the 5-day slowly starting to flatten out and starting to slope to the upside. So we averaged up right here and we kept our stop losses exactly at the same spot. And into tomorrow, if they continue to push towards this, let's say $73 and change, they're going to remove the averaged up positions and leave the initial positions on and take it all the way towards that $78 or towards that $88 or $89 to the upside. Pretty simple. Wait for the momentum to shift positively, because all these stocks, the daily is still in an uptrend. If you go to the daily, and if I turn on the moving averages right here, let me turn off the indicator, drawing lines. All right. So right here, as you see, the stock is above the 20, which is the blue line. The stock is above the 50 SMA, which is the yellow line. The stock is above the 200-day moving average as well. The daily is in an uptrend. There is no denying that. But again, if you're going to enter something on an uptrend, you need to go to the 15-minute time frame. And the first question is the stock price trading above or below the 5-day moving average? Number one. And if I enter right here, is there any recent lows for me to set my stop losses at? Number two. If both of your questions are answered, and that is the answer should be like the stock should be trading above the 5-day moving average, and the 5-day moving average should be sloping to the upside. So if that condition is satisfied, the next question is, okay, if I enter right here, where can I set my stops? Go to ATR. And that's how it goes. And then once you calculated the stops, go to the position sizing calculator and calculate the proper position sizing from there, and then buy those amount of shares that even if you get stopped out, which you will most of the time, you wouldn't lose more than 2% of your entire account. All right, so let's go over another example. Take DLR, for instance. How's the 5-day moving average looking in DLR? Right here. Right now, the after hours is sitting at 189 and change. What's the 5-day moving average looking like? You can see the 5-day moving average slowly sloping to the upside, which is telling you the buyers are taking back control in the last 5 trading days. Simple as that. So we don't use these 5-day moving average to typically buy and sell, but again, it can act as support as well. Right here, as you can see, they pushed towards the 5-day, found buyers from 5-day moving average at 177s and pushed all the way back up towards 183. And right here, once they broke under it, you saw what happened. They pushed all the way up, tried to close above it, but again, next day, gap down altogether because the 5-day moving average is still declining. So the slope of the 5-day matters more than where the 5-day moving average is located at. If you see a negatively sloping 5-day moving average on the chart, wait for it to set up. And if the stock price is trading above it, wait for the 5-day to flatten out and then look for entry instead of chasing it as soon as they start closing candles above. All right, so this is how you use the 5-day moving average, by the way. So tomorrow, I got a few exercises for you. Since the QQQ is right near the 5-day moving average, if you're lucky, you might see a open under the 5-day moving average tomorrow to observe how it actually plays out. But if they gap up tomorrow and if they pull back towards the 5-day, since we are sloping to the downside on the 5-day moving average, look at how the SPY and QQQ reacts around the same. Just observe the price. So it's just a momentum indicator, right? So it's just a momentum indicator for the last 5 trading days. In the last 5 trading days, the sellers are taking control right now, and the price closed right under the 5-day moving average after having a strong trading day. Observe the price action tomorrow to see how the price reacts around the same. Small exercise. So if they gap down tomorrow and start pushing higher, where do they stop? 5-day moving average would be the first area of interest. If you're scalping QQQ or if you're day trading QQQ, this level is still going to play a major role into tomorrow's trading session, by the way. So if you trade futures, we already pay attention to the 5-day moving average whenever it shows up near the price. And tomorrow is one of those days. Pay attention to QQQ and SPY, and it's going to give you a real-time example. And let's go over Tesla. Any questions? Go ahead. Go ahead.
Yeah, Mario, I wanted to pedal backward real quick. When you're on the daily and you're above the 20, right? Sometimes you have a green candle and sometimes you have a red candle showing a downtrend. Would you still trade on the red candle or do you wait till it turns green?
Are we talking about swing trades? The red candle.
Yeah, swing trades.
Yeah, red candle, green candle doesn't really matter to me, to be honest. Like when we open a trade and when we set our stop loss, all we care about is did our stop loss get hit or did our profit taking target get hit? As simple as that. So now, before entering the trade, the conditions for me are pretty simple. If you look at the stocks which have been traded in the small accounts, we follow one particular template, one particular setup. We need stock to gap up higher. Take UPST, for instance. There is a gap right here. And take DLR, for instance. There is a gap right here. And what was the previous one? NOW is the recent one which we trade. There is a gap right here. And what is? NNE doesn't have any gap. That's TRV, for instance. That's something which we traded. There is a gap right here. Every single stock which you see, which is posted in the small account, 95% of those names will have a gap up. And it will be in an uptrend. So the gap up will be happening at your all-time highs, and that is great. So now the daily is already in an uptrend. So what I wait for is I anchor the VWAP. We'll talk about anchored VWAP in another class. But let's say go to the 15-minute time frame. The daily is already in an uptrend. So what you do is you wait. You see right here on TRV. Whenever they are right here, all the way down. They've just been selling, 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 and selling. So what I wait for is wait for the price to get back above, and this gap up cost exactly the same. So now the price is above the 5-day moving average, and the 5-day is starting to slope to the upside. What you do is you anchor the VWAP and you wait for the price to get back over this anchored VWAP of this gap up. And once that happens, which happened right here, your entry will be at 254, and you set your stop losses right here at around 250 and take the risk right there. I'm sorry if I went too fast on that one. So simple things to do is I need the 5-day moving average to start, 5-day moving average to be sloping to the upside, and stock should be trading above it. The daily, it's I don't even have to say it, it should be in an uptrend. The daily should be in an uptrend. If the daily is not in an uptrend, I don't care if the stock is trading above or below the 5-day moving average. I don't trade it. I don't buy it. If the daily time frame is under the declining 50-day moving average or under the declining 200-day moving average, it failed our first condition. There's absolutely no reason to get to the second condition in the first place, which is looking at whether the stock is above or below the 5-day. If the daily in an uptrend is not satisfied, don't waste your time. Drop the stock and look for something better. Because if when you're buying shares, you need to look for stocks which are going to go up.
Hey, Mario.
Go ahead, Lira.
Hey, brother. Hey, I have a question, something I have been noticing. So what if a stock barely went under the 20-day, but the 20-day is still strongly on the uptrend? But if you see a potential, the fact that it's under, but that 20 is still going up, would you take that trade?
For me, I don't typically pay more attention to the 20-day moving average, but I'll pay more attention to the 50-day and 200-day moving averages.
Okay.
That is something which matters more to me. 20 is just a momentum for the last 20 trading days, if you think about it. But I don't want the stock price under the 50-day moving average or under the 200-day moving average. Once the stock price even gets down under the 50, I don't really care if it's sloping up or down at that point. As long as it gets back above the 50-day moving average, no touch for me. So when they close under the 50-day moving average, the 15-minute time frame will already be telling you the 5-day is also declining to the downside.
Yeah, right, correct.
So it'll be an unwritten rule. So for the last, let's say, stock has been selling off and they just closed under the 50-day moving average, and it's very less likelihood that the stock is trading above the 5-day moving average at that point. So it violated first condition, which is stock trading under the 50. And it violated the second condition. We don't even go to it because, well, it's in a downtrend. We don't really care.
Sure. Okay.
So 20, if you're someone who pays attention to the 20 SMA, the same rule goes. If the stock price is under the 20-day moving average, well, what you do is you wait for the stock price to get back above the 5-day. Once it gets back above the 5-day moving average, you can take the risk for expecting the stock to break above the 20. Take QQQ, for instance, right? So QQQ closed under the 20-day moving average and with a nasty gap down right here on November 15th. The 20-day moving average on QQQ was around 499.92. They consolidated near the 20-day moving average for quite some time. This blue line right here is 20. And today they closed above it. But they're still under the 5-day moving average, which is why I told you guys to pay attention to QQQ and SPY both tomorrow. Because if they get back over the 5-day moving average, that's where we'll enter our QQQ swing trades. And we'll take it all the way back up towards new all-time highs at around 520, 525, 530. Who the hell knows how high this can go towards the end of the year. So 20-day moving average is fine. But again, if you're going to trade with 20, pay attention to the 5-day moving average. Do not enter anything just because the stock price is tagging a moving average. That's how you're going to put yourself in a position where, like, if it works out, great. It's going to tag and rip to the upside. Great. But what if it doesn't? You don't have any areas to set your stop losses on because you just blindly entered a trade because you have a line on the screen. So instead of using these moving averages as a support and resistance levels, use them as a tool to gauge the momentum on. That's going to help you understand the markets way better.
Hey, Mario, could you set an alarm on that 20-day?
Yeah, you can.
Oh, that's awesome.
You can just right click on it and you can just add alert on level up, add alert on the moving averages. And once it processes up, you can enter and exit.
Awesome. Thank you, bro.
All right. No worries. So any other questions on the 5-day? Hopefully it's clear, by the way. So it's pretty as simple as it gets. Avoid stocks which are trading under 5-day, avoid stocks with a declining 5-day, wait for the stock to get back over the 5-day and wait for the 5-day to start sloping to the upside. See, simple. So this is all you need to look for. And this is all we do as well when we're swing trading. So we are watching roadblocks or BLX into tomorrow. And we didn't enter today. Why? So today we did cross about the 5-day, but we didn't enter anything today because by the time it crossed about, combine everything we learned so far. What is the opening print? Go to the daily chart of RBLX. And what's the opening price for roadblocks today? $50.53. What's the ATR? $1.91. All right. So which means on the upper bound, 52.40. And on to the lower bound, we're talking about 48.60. That is the range. 52.40 to the upside and 49.30ish to the 48.30ish to the downside, right? That's the range. So now go to the daily time frame. Where was the 5-day moving average located at? 52.60. By the time they cross the 5-day moving average today, the stock has already moved 1 ATR to the upside. So if you paid attention before, I said it's also going to help you understand when the stock has already rallied up and when you're chasing and when you're actually buying an uptrend, right? Entering today won't be a good decision because the stock price has already moved 1 ATR. At that time, it doesn't matter if the stock price got back above the 5-day moving average or not, because the 5 days moving average is still declining to the downside. So what we do here is we keep it on the watch list and wait for tomorrow. So if tomorrow, if the stock price stays above this 52.30s, the 5-day moving average will slowly flatten out and then start rising to the upside, and we'll enter right here and our stop losses will be right here. So the last 5 days of momentum has been recaptured by the bulls, and we'll have a proper area to set our stop losses on, which will be around that 1 to 1.2 ATR from our entry price. And now our target will be, for the first sell, it will be around this $55 and change, and the next thing will go take it all the way back up towards, who knows how high this can go, maybe towards this $58 or maybe towards this gap fill at 69 to 70, who knows, right? So today we didn't enter roadblocks even if it satisfies our condition because, well, ATR, they moved 1 ATR already. The risk of you entering a new position there is not good, and odds of you getting a better position into the upcoming days are way higher as well. Something to pay attention to. All right. So this is how you combine the different indicators to gauge the probabilities, by the way. Let's say if I entered right here blindly at around 52.60, well, the price went up all the way to 53 and only to close the day all the way back towards 52 again, which is exactly 1 ATR from the entry price. So when you see the stock price already moved 1 ATR, well, you missed it. You missed it for that particular day. Wait for the next day market to open and then deal with it over there, or wait for them to come back down towards the VWAP and show some strength and take it from there. Don't chase the gap. Don't chase the 1 ATR moves. Either wait for the VWAP or wait for the next day. You're not missing out on anything, by the way. Just remember, you don't need to buy the low or buy the bottom to make money in the stock market. You just need to buy the strength. You just need to be in the direction of the trend, right? So doesn't matter if you enter at $50 or $52. Where you enter doesn't really matter. How you manage the same, and where you exit matters more to me. All right, so something to pay attention to. So hope the 5-day moving average, the concept of 5-day moving average is clear. So whenever I say the stock is about trading above the 5-day or the 5-day is still declining, this is what I'm talking about. All right, I hope the ATR concepts are clear as well. So whenever I say stock has moved 1 ATR to the upside, which means the stock has made, let's say ATR on SPY is 590. If I say stock has moved 1 ATR to the upside, which means stock has already moved $5.90 from the entry price to the upside, so don't chase it. Same goes to the downside as well. Sometimes you'll be having a trend days to the downside, by the way. Trend days just doesn't have to be to the upside. QQQ was an example right here. This big red candle, which you saw this day. Right here. Okay. If you go to the daily charts on the QQQ, you'll see this big red candle on November the 15th, right? So what's the opening price? 503. What's the ATR? 7. What's the lows of the day? 494. exactly opened, moved one ATR to the downside, found buyers, and closed at 496.50. So this is a trend day to the downside. Example for trend day to the downside for one ATR move is on November 15th daily candle compared with the ATR. And to the upside will be on November 19th, which is today. Like they moved one ATR to the upside and stalled down right over there. All right. So pretty simple concept. And it'll be greatly helpful when you're swing trading. This is what we use on a day-to-day basis, the 5-day moving average and ATRs. One of the few things which we use. So hope the concepts are clear. So now when you see any updates which was shared in the small accounts tab, go to the chart and see if you can understand it better. Why the stop loss was given at 175s, why the stop loss was given at 400s, why the stop loss was given at that particular area when the stock price is trading over here. Immediate next response should be, okay, let me check the ATR. That should answer my question. So the next question will be, okay, the stop loss was fine. Why did we enter right here? Check the 5-day moving average. That'll answer your question. We will never enter anything if the stock is trading under the 5-day moving average, by the way. Number one, it never, ever, ever happens. Stock needs to be above the 5-day. And you won't see any trades in here which is off in a downtrend. Every single ticker symbol right here, everything is in an uptrend. There's none of it when entered will be in a downtrend either. So these are all some strict rules which we have in place for a reason. And one of the main reasons why we are outperforming the broader markets as well. It's not because of our entry strategies, it's because of the rules and the system which is backing it. So if you have any questions on both of the topics which we discussed, feel free to ask. Happy to answer.
I have a question, Mario. Do you use this strategy for 3-day swing trades, for 3-month swing trades, or do you have different strategies?
For me, it's when I open a trade, I honestly don't worry about how long it takes to get there. For example, I'll show you a ticker symbol. The ticker symbol AS, is that the ticker symbol which we were holding? Yeah, no, it's Ryan, RYAN. Let's take this ticker symbol Ryan, for instance, right? So when we entered this one, we were entering at around, right here, if I'm not wrong, $5 and change, just a minute. All right, so when we entered Ryan, we entered it around that $52 and change-ish. And it took almost like 4 or 5 weeks for us to play out, by the way. All it was doing was just chopping around over and over and over again without doing anything. So right here, if the weekly chart, right here, you can see we entered right here at around $58 and change for 4 weeks. These are all weekly candles, by the way. Each candle represents 1 week's worth of price action. For 4 weeks, it didn't do anything. But again, it didn't violate our stop losses. There's absolutely no reason to make any changes. So our stop losses was somewhere around $53-ish and change. And that came close to it multiple times, but never tagged it. So no reason to make any changes, right? And then held the breakout area. And you saw the fat green candles taking us all the way towards that $70. One of our biggest trades, by the way. But again, it'll make you wait. But time doesn't really matter here as long as the stop loss is not violated. Where the time does matter is sometimes there'll be stocks like this. Take MNST, for instance, right? They will do something like this right here, as you see. So it's been from 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 weeks of nothing. When you see something like this, then it's time to dip. So when you see the stock price doing absolutely nothing for 17 weeks straight, then there is absolutely no reason to be holding on to the name especially when the markets are trading near all-time highs or pushing to the upside. There's something called as opportunity cost. The maximum I'll give a stock for working in my favor is around like 1 month time. If after 1 month, if it's still not working in my favor, well, I was just wrong. Early entry is wrong entry, if you ask me. So much as well better. I'll give it 1 month maximum. Within that 1 month time frame, I need the stock to work in my favor. If it's at that time, if it should either work in my favor or stop me out. If all it's doing is just chopping around doing nothing, sometimes you'll see stuff like this. It won't get you a profit taking target. It won't stop you out either. All it'll be doing is doing absolutely nothing and wasting your time. So give it 1 month maximum. If 1 month, nothing is happening, cut it and wait for something to happen and then take it. So because the more you hold on to something which doesn't make you any money, the more money you're technically losing on opportunity cost, because that money, if it's on some other stock which is actually in an uptrend, you'll be making money right now, but that money is stuck in something which is not doing anything.
Yes, perfectly explained. Thank you.
Yep. And so, yeah, time frame doesn't really matter. The rules stay the same regardless of how long you hold it. So these are all what we spoke about, the 5-day moving average. All that only matters as long as you press the buy button, by the way. Once you press the buy button, the only thing which is going to matter after that is, did it hit your profit taking target or did it hit your stop loss? That's the only two things which is going to matter. It doesn't matter how long it takes, but for me, 1 month is the maximum. Anything after 1 month, I don't need it in my portfolio. I will wait for it to set up and then take it down the line. I can always re-enter over and over. If you've been here long enough, you'll know how many times we cut our losses early or trimmed our positions early. Take DLR. We trimmed our positions like 2 days back and we added back yesterday, and now we just sold it for profits. So management of any stock is necessary, but if they're just doing absolutely nothing but staying in your portfolio as a waste of space, it's time to go. So needs to pay rent, right? If it's want to stay. So if it's not doing anything, kick it out. Simple. So any other questions? 5-day, daily, ATR. We good? All right, so into tomorrow, keep an eye out for SPY and QQQ towards the 5-day moving average. Observe it. See how the price is doing. Don't take any trades on it yet because you need to observe a lot of other price actions to get a basic idea. So if you want something to do for tonight, go to the small accounts tab and look into all these tickers. Look at the time at which the trade idea is shared, and go to the charts based off of that time on the 15-minute time frame and see how the 5-day moving averages are looking around that time frame, and see if you can start finding a pattern there. You will, trust me. So one I already told you guys, which is you'll always see a gap up. Number one, any ticker symbol which you see, you'll always see a gap up. So then look for the entry. Why was there an entry right there? How was the 5-day moving average looking when the entry was made? The thing I love about this group is if I enter something which is under the 5-day, I'll be held accountable. The first question I'll get, why are you entering here? Because the 5-day is declining, because they know I won't do it. So there's systems in place for a reason. Stick to it. And ATR and the 5-day moving average is one of them. And we'll do one more class and I'll talk about AV VAPs and how we combine these three indicators together. We went over how we combine ATR and 5-day moving averages together when it comes to entering something and setting the stop losses on something. And AV VAP is going to up it one more notch to the upside. So we'll talk about it in depth in the next class. But for tomorrow, observe QQQ and SPY. And is there any other stock which is near the 5-day? Let me see. Hold on. How is Apple doing? Apple should be about 5-day by the looks of it. Yeah. Apple is trading right near the 5-day moving average. So keep an eye out. If they come back tomorrow, Apple is about the positive 5-day moving average. Daily is looking like it's in an uptrend. And what else we got? Amazon. Amazon had a nasty day yesterday. It should be under the 5-day. Yep, there you go. Keep an eye out for Amazon as well, because yesterday's gap down, bought it down under the 5. Watch out for 207 area to the upside into tomorrow if they rally to the upside towards that zone. That's where the 5-day moving average is. Look at how the price is reacting around the same. So get back over the 5-day, then we can take that gap up trade towards the 211. But for now, pay attention to the 5-day. QQQ, SPY, and Amazon. All these three are trading right near that vicinity. Look for reactions into tomorrow. All right. So let me know what you learned from it after observing the same into tomorrow's price action. And if you're trading futures tonight, the 5-day moving average should be right around the same area, right? Yep. The 5-day moving average on futures is right there, around 850s. So we'll see. Overnight traders, if you're going to trade overnight, pay attention to this area, 850, 20,850s to see how the price is reacting over there. And we'll deal with it accordingly. All right. So if you have any questions, feel free to reach out. And as always, have a great rest of the night. And I'll see you guys in the morning. All right. Take care. Bye-bye.